Good morning and welcome to Trade Setup right here on BloombergQuint Live. I'm Neeraj Shah. It's an interesting day of reportage simply because I think markets will be focused squarely on the US inflation print that comes out later on. Now, first, the global wrap therefore. I think higher inflation print fears, US CPI that gets released today, and if it's indeed 8.4 or whatever, then that would be a problem. So inflation and lower global growth fears impact equity markets globally. US markets ended the lows of the day, by the way. Brent is below the $100 per barrel mark as the China lockdown sparks demand fears. And PM Modi and Joe Biden focused on ties despite the differences in Ukraine. That's the first bilateral meet in some time, and there's a two-day meet that is underway, right, between US and India. But the address that PM Modi and President Biden had was focusing on the ties despite the differences on Ukraine, which is maybe a bit of a constructive thing. But the equity markets per se, lower. US markets ended at the low point of the day. I'm guessing stoked by these fears of the higher inflation print. Keep in mind the dollar index is now above 100. If I follow or obey what the yesteryear or earlier statistics used to be, quant indicators, dollar index at the highs that it is, all of them would suggest that there should be a sharp correction in place. I've been talking about this now for the 4 or 5 days. What has happened instead is not a sharp pullback, but a gradual grind down of sorts that we're seeing on the indices. So that's the pickle really. But key point is the US markets ended at the low point of the day. Now there's this chart on the Bloomberg terminal, which shows how globally hedge funds have built record bearish bets against emerging markets. I actually saw this chart courtesy a tweet from Tariq. He runs a Twitter handle by the name of It's Star. He tweeted this out and then I looked it up. But it's a very interesting bit that you would want to believe that hedge funds would be short emerging markets because of either currency fears, liquidity fears, or inflation fears, which might have a bit of a bearing on the multiples. So inflation and higher rates and therefore the multiples. Now the reasons may be varied, but the hedge funds have built record bearish bets against emerging markets in general. And that's a very interesting statistic that this chart points out. So Tariq, if you're listening to this, thanks for putting that out. Be that as it may. So bit of a nervousness around markets, equities globally, and India should not be any different. No, I mean, we didn't have a great day in trade yesterday either. And it looks like we'd start off on a fairly tepid note in the session today as well. Let's see if we build on from there. Keep in mind also, viewers, that largely anybody who's got a long bet in India would probably want to square it off before the very long weekend that we are due to have, right? Thursday, Friday, Saturday, Sunday, 4 days. Even though the world might be on a weekend, but from Friday onwards, but we have one more day. And therefore, I believe that will be the nature of the day. So the trade setup, higher US yields, China slowdown, higher inflation, all adds to woes for equities. I think staying nimble and light ahead of the long weekend is very, very advisable. So unless you're very sure of your position not getting impacted due to anything happening around the world, great. But otherwise, a 4-day weekend, stay light. Don't stay very heavy on leverage longs for that matter, or shorts for that matter, but definitely not longs looking at the current scenario. I do see that there could be some bit of profit booking in stocks with very strong run-ups. So, for the longest time, we've been votaries of what the fundamentals point out for sugar, maybe even for defense, but for sugar for sure, for some of the other pockets which have run up, you might well see some bit of profit booking happening in some of those stocks. I mean, it's unusual the kind of moves that we've seen in Renuka Sugars, for example, right? And frankly, viewers, I mean, I don't know what happens in specific companies, but I'm just saying, the word of caution that I have is that 4 days ago or 5 days ago, I got a WhatsApp forward about Adani Group looking to buy out a stake from Wilmer in Renuka. That was a 2018 story. I mean, well happen, I don't know, but people are circulating old stories as well. And maybe, like I said, I'm not very wise. So maybe some of the reasons I already known to the market are not known to me. You might know more about what's happening in Renuka than I do, for sure. I'm just saying that, some of these things seem a bit unnatural, the kind of moves that are happening. So maybe there is a reason to it. But if there isn't, and if you don't know the reason, then you might want to stay a bit light. I mean, look at the MOV function, it just shows the kind of moves that have happened. Adani Green, of course, got that investment, and one still can't figure out what the base fundamentals of Adani Green is. Any fund manager that I talk to don't quite know the exact handle of what's happening in some of these stocks that are running up, but running up they are, and who is to argue against stock price movements? So great moves there for a bunch of those stocks. Be careful if you're trading into these without complete knowledge of some of these. What about stocks to watch in the session today? That's the key point, right? So one is TCS. The results came out, and the revenues were up about 3.5%, 50,591 versus estimates of 50,263. So bang on, smack in line with estimates. EBIT 12,628, 12,562 was the estimate. Again, largely in line. You would argue that the margins slipped a little bit because they are 100 basis points lower than what the Bloomberg estimates were. But I would argue that in line, considering all the pressures that are there, that's very sound management of EBITDA margins as well. Bottom line was slightly, largely in line, maybe 100 crores below estimates, but I think largely in line. So no complaints as far as the delivery goes. Their order inflows were very, very strong, but there were two large billion-dollar deals, I presume, as a result of which it looked inflated, otherwise maybe not. So these are the comments that came from TCS. They said that the attrition will optically go up for the next 2 quarters on a last 12-month basis, LTM as they say, before coming down. So they are admitting that 2 quarters, the attrition could look heightened, but then it will start cooling off. So keep that at the back of your mind. So demand is very strong, with very strong market acceptance for their services, and they continue to see momentum. So fairly positive commentary on the demand front from TCS as well. The question is, has it run up a bit, or is it still in line with estimates? So I thought JPM view was interesting. It's a neutral with an unchanged target price of 3,900 according to them. They say that the constant currency quarter-on-quarter growth was strong at 3.2% for a seasonally weak period. Signings have hit a new high watermark at about 11.3 billion. But like I said, that this in part has two very large one-off deals which will cool off. They themselves said that the run rate will cool off to about $8 billion odd starting this quarter, Q1 that is, but fairly strong signings. They said that the management sounded optimistic on the overall demand environment. As I said, supply side issues are likely to keep the near-term margins volatile. Again, not surprising. According to them, the key word is that they don't see further upside triggers with the stock trading at about 31 times 1 year forward, which is about 1 standard deviation higher than the 3-year average, and a premium to both Infosys as well as Accenture. So for them, TCS is a neutral. Goldman Sachs says that they are buying TCS simply because they believe that the company has shown resilience and will probably get higher multiples because of the sound performance that it is doing. Let's wait and watch how it shapes up. The other one is Delta Corp. We'll talk to the management, by the way, today. I think at 11:15 or 12 or thereabouts. But yeah, the numbers came out. Revenues on a quarter-on-quarter basis down about 12%. EBITDA down 35%. EBITDA margins at 31% versus 43%, and PAT down 32%. Arguably, you should do it on a YOY basis because this business is seasonal, yes. But I thought it was important simply because even the last quarter would have been skewed because of COVID variations and otherwise, and which is why I did a QOQ. Keep in mind, QOQ will look very deflated simply because October, November, December was great tourist season, so to say, even though in India it was a bit curtailed. But January was curtailed by Omicron, and therefore, for every tourism-related business, Q4 over Q3 will look very bad, and Q1 over Q4, which is the next quarter when we do the reportage, Q1 over Q4 will look very inflated. But you know, April, May, June last year was impacted by the COVID wave then, so even YOY will look inflated per se. So be that as it may, I'm just telling you that Delta Corp, compared to a very strong quarter 3, didn't have a very strong quarter 4. Let's see what the management has to say about things. Maybe the stock reacts a bit negatively today. Let's see. Kesoram, aside of the numbers, they've also approved the demerger of its rayon, transparent paper, and chemicals business carried out by the subsidiary Signet. So let's see if that stock has a bit of a reaction. The two JSW Group stocks could be in focus. JSW Utkal Steel has received the environmental clearance for about 13.2 MTPA greenfield steel plant in Odisha. That's a large one. They've gotten the approval. Maybe that stock reacts a bit, and maybe JSW Energy reacts a bit negatively because a company's JV, BLMCL, has received a notice to stop mining operations in Rajasthan on the two lignite mines. This JV got BLMCL got the instructions from the Rajasthan government, and JSW Energy is in discussion with the government to ensure no impact on the power plant operations. But maybe, just maybe, the stock has a bit of a negative reaction. So let's wait and watch. Some strong price and volume actions seen. So aside of Renuka Sugars, aside of the Adani Group stocks, some other, those are large ones. Adani definitely very large ones. Some of the smaller ones which deserve a mention include a BDL, not small really, but BDL, Canterville Retail, Century Enka, Ganesha Ecosphere, and Methane Alloys. All of these had very strong price and volume action. You might want to look at some of these if you want to look at some of the smaller names. As in, study these companies, and if you find some merit there, maybe you want to kind of look at them. Motherson Sumi, ET Auto reports that the Motherson Group is in talks to acquire KKR-owned Marelli. This is a fairly large acquisition that Motherson Sumi would do. Unless I'm very wrong, if they manage to pull this off, if they are indeed looking to. This is from ET Auto. We have at BQ have no idea about this per se. But yeah, if indeed they manage to pull this off, then this will be a very large acquisition that Motherson Group would do. So do watch out for that one as well. Just trying to see if there's something else that I have missed. I'm sure I've missed some things, yeah. So Kesoram, like I said, the demerger is interesting, but the numbers look very, very bad. Margins were hit and the losses continue. So keep that at the back of your mind. What else? Telecom stocks, because TRI has recommended about 35% cut in prime 5G spectrum base price. So do watch out for that one as well. And HAL, okay, I missed out on HAL. Like I've been saying, defense is in the peak of things. Company and the consortium of Larsen & Toubro emerged as an L1 to make 5 polar space launch vehicles for ISRO. So maybe HAL also has some movements today. Mind you, I'm not, by the way, just so that people don't misconstrue, I'm not recommending one way or the other on any of the stocks that have done really well. So the textile export stocks or sugar stocks or the Adani Group stocks. I know I'm not recommending any kind of activity that people do based on what I'm trying to say, but yeah, you should study the price movements in some stocks before you take further bets if you have to take them. That's the limited call that I'm trying to make. Thanks so much for tuning in today. Have a safe, profitable day ahead. And if you're stepping out, stay safe.